Good morning. Today is the I always forget today's date. Today is the 21st of July 2014. Alpha Trading Strategies, and we are looking here at four charts here. Goldman Sachs here on the left, Baidu middle, BAC, Bank of America, and Amazon on the right. These obviously are the equities. For those of you that are just coming to our site at Alpha Trading Strategies, welcome. We utilize the methodology. We say this time and time again. We utilize a methodology which triangulates the three pieces of data that is always present in market activity. And those three pieces are price, volume, as well as what we call alpha or spread. By triangulating, that's the word, triangulating these three pieces of information, we essentially are able to create a leading indicator. We know that that is a very powerful term, and we do not use the term lightly, creating a leading indicator. We say that because it allows us to have, it gives us predictive value. Um, Obviously, everyone's looking for the leading indicator. The leading indicator, it's considered somewhat of a holy grail. Um, but it is indeed what people are looking for. The fact remains, guys, is that leading indicators cannot be bought. If that's the case, if that were the case, everyone would have them on their charting packages. No, leading indicators are forged. They're not purchased. It isn't an add-on to NinjaTrader. Okay. The average trader out there does not know how to read a chart in order to identify professional participation. They cannot just point to it on a chart. They can't just say there or there. They can't do it. The average trader uses lagging indicators such as Bollinger Bands, stochastics, moving averages, relative strength indicators, ADX, Keltner channels, Fibonacci retracements. The list goes on and on. They spend years and years and years toiling with these things that have been given to them freely by the establishment in order to basically have you all singing a party line or singing the same tune in terms of where you are going or what you're going to use to enter. If you Google the term, the five most commonly used indicators, you will find that. Yeah. Let's get it. Here's the timestamp here. The present time is 10:08. Okay. So, moving quickly. As I said before, the average trader does not. Okay. Let's get a timestamp here. The present time is 10:08. Monday, July 21st, 2014. Okay. So, as mentioned, so when we talk about these lagging indicators, essentially what it acts as is a Trojan horse. If you look up again, the five most commonly used indicators, this is very powerful because essentially what you're talking about is that these indicate if these are the most widely used indicators, RSI, MACD, I don't know what the other, maybe a moving average and stochastics. I think those are at least one of the top three or four of the five. Essentially, what that means, if these are the most widely used, then that means that if these numbers can be manipulated, when I say manipulated, misdirection to trigger these indicators to give a signal, essentially you're going to have a predetermined outcome which can be used to make money off of. And I know that we're not the first person to think of that. So if you know what the most widely used indicators are, and you can misdirect price to trip people into the market, essentially you've got a cash cow. Okay, so we don't use any of those indicators, and none of those indicators are needed. You are not going to make money. Listen, let's be really clear here. If you do not know what these bars mean, irrespective of color, irrespective of market direction, in terms of the professional mindset, it is our opinion that you should not trade. I know that it may be enticing. I know that you may feel that you're successful in another area and that this can, you can parlay that into this. You will lose. You will lose. And, you know, that's just the fact of the matter. I don't care what you're using and if you're using this and you see, here's the thing. The market is like a nymphomaniac with no memory. Okay? Yeah, you and her may have really had a great time today, but tomorrow she's going to look at you with a blank stare and say, "What have you got for me today, big boy?" Okay? And if you don't have something that you can consistently draw on, okay, you're done. Actually, the market's like a black widow that's a nymphomaniac with a bad memory. I forgot the black widow part because she'll kill you. She'll kill you. Black widows kill their mates. Look it up. So anyway, I just want to drive that home in our unique way. So let's look at what's going on in the market today. Okay, we're gonna talk about this Amazon trade in a minute, but this is from last week. Be it BAC, Bank of America, OEX 4500, SPX 1600. Crude oil is doing nothing because we've got about 25 days remaining on that, which we'll probably exit that ahead of time. So right now we're at about 84.82. Okay, 84.82. All right, so today, because we want to open up something for next week, these are all outside of gold. Now, gold's going to be pretty nice because this only has 7 days remaining, so the time decay should really kick in on that. Should be nice. And ES is 4 days. This is all this week. SPX this week, BAV. Okay, so we opened up some Amazons. We want to briefly break down the trade, essentially what we do. We triangulate a couple of components here. So let's look at the Amazon that we just did this morning. We got our sequence. We scanned the markets. We looked at whatever we can find. We looked at stocks. We looked at since we're already in gold. We look at everything. Maybe about 6 or 7 things. Okay, we found Amazon. All right. So what we did is we sold the 390 call, and we bought as protection the 392. All right. So this is going to give us about $600. We collected about $600 in premium on a $5,000 margin requirements. That's about, what is it, 11, 12%. For a weekly return, it's not bad. Okay. Didn't want to open up any more until I closed some of this out. So that's why it's only 5,000. All right, so let's take a look exactly what we did. So the first step is the sequence. Nothing happens, guys, unless you hit the sequence. I mean, we could have sold the stock if we wanted to. We could have gone short the stock. We don't short stock because there's no leverage in that. No leverage in that for us. We just don't like it. Okay. There's no advantages. Let's talk about the advantages. Yeah, so here we are, isometry. So what are the advantages? So isometry is a combination of PVSA and understanding options writing. We first obtain the entry sequence. That's what we do first. Now, instead of trading the stock or futures, we sell credit spreads. We don't have time to educate you on that because you're not paying for that. But there are several advantages. And there they go. Wow. So first of all, we like to start with is risk. Finite, predetermined risk. All right. The second is that most options expire worthless. Most options expire worthless. Pivotal, though, is that our sequence correlates with options that have a good premium to sell. Time is on the side of the seller. As options decay in time values, options are a wasting asset. They lose value, so time is on our side. We can choose the probability percentage of out of the money, which we're going to look at in a moment. We can write the option far out of the money. So we're not at the actual price. We're in a bunker somewhere out there. Many markets now have weekly options which have faster time decay. So on a weekly option, essentially what's occurring is that the time decay is kicking in usually right around Tuesday. If an option expires Friday, usually Tuesday in the afternoon, that's when the time decay starts accelerating. and then it accelerates at a faster rate over the last couple of days. So let's look at what we've done here. Okay, so once again, we sold a 390, 392 call. The sequence, nothing happens without the sequence because the sequence leads us with everything. This is, you've seen all of our futures trades with the crude oil. The sequence is everything. And the sequence is a 12-part classification of all the bar types that are found on all charts. So it doesn't matter because it's all the same human being, and they all have self-serving interest, and they're going to act the same way as they use the public in order to come into the market. They need you before they come in. All right. So the first thing is we identify typically something 10, 12% potential return off of margin required. So we found that. The next thing we want to do is we're going to look at the probability of the option expiring worthless. So we sold the 390 call. This has a 13.84% probability of expiring in the money. So it's got an 86% chance of expiring out of the money. We like that. That's a good number. Okay. And so when we bought the, what's his name, in order to hedge ourselves, and there it is. So where is the market right now? It's sitting right here at 358. So it would have to go up. It would have to go up over $30 by Friday. And we've already seen that there has been professional short selling, so it's a very good chance that that is not going to happen. So there you have it. So as long as it just keeps, when it keeps these gyrations, sideways moves, and all this crap, and people are buying and selling and buying and selling, as the option writer, we're sitting, and it's just an income source for us. There was nothing in Baidu, there was nothing in Goldman Sachs. We're sitting in BAC. BAC is doing nothing. It's just piddling around, and that's what we want. Okay, so right now we're up about 51 bucks on that. It's just piddling around, doing what it does, and that's what's going on. OEX, we collected 6,000 on that. We're at about 4,500 locked in. So, and crude oil is just bouncing around. Gold is still at 2,000, as we mentioned. That should accelerate. So that's going to do it for today, guys. Let's get a timestamp. This is not rocket science. Remember this. Obviously, this is not something that you're going to be able to do in the back of an envelope with crayons, but it is not rocket science. Essentially, what you have to do is you have to do two things. Number one, you have to be willing to forego convention. That is all of the crap that they want to shove at you. Two, you have to understand that these markets are controlled. If you believe that this is random, all of this money, you're insane. It has to be controlled. As humans, we try to control everything. Why not the markets? Okay, you've got a bunch of people that all know each other, that cooperate with each other, that are all in the same tent pissing out on the public. The second thing you have to be able to do is to understand that if someone's willing to show you this and is willing to teach you, then you can either be smart or you can be stupid. You can spend the next 5 to 7 years of your life trying to figure this out. Okay? Or you can pay, because you're going to pay anyway. You're going to pay with time, you're going to pay with money. Simple as that. Or both. So we say take the smart pill, accelerate your learning curve so that you can see this planet by making money anywhere on the planet if you choose to. That's going to do it for today, guys. It's been a great morning. If you'd like to know more, of course, you can go to our site, alphatstrategies.com. Take care.